The Governor of the RBA, Philip Lowe, has addressed economic concerns about rising inflation and higher interest rates. Joining me now is our business reporter, Edward Boyd, who is in the audience at the Governor's address. Ed, good to see you. It wasn't all doom and gloom. There was some things to hope for on the horizon, and also a reminder that our settings are pretty good here in Australia with a very low unemployment rate. But rates are going up, aren't they?
Rates are definitely going up, Laura. That's one of the things that the Governor of the Reserve Bank made very clear today in his rare public appearance. He doesn't speak in public very often. He actually took 30 minutes of questions from the audience as well, which is quite unusual for the Governor. But he did lay out the pathway for Australia's economy over the next year, and it is a pathway of higher interest rates, all designed to bring down inflation, which he said today is going to peak now at 7% in December. So by the end of this year, we'll have inflation at 7%. I did get a chance to ask the Governor about the risk of a recession for Australia's economy, and he said he doesn't see a recession on Australia's economy on the horizon. But he did leave the door open for a very slight possibility that Australia could have 2 negative quarters of GDP growth next year, in line with what other big economies like we're expecting for America. We are expecting a recession for the States. So the Governor was pretty upbeat, though, about Australia's economy and the really low unemployment rate. Unemployment's at the lowest level in 50 years. So he did talk up the strengths of our economy today.
Yeah, he certainly did. Let's talk about where interest rates are headed as well. This speech also coincided with the release of the RBA's minutes. Essentially, he said that they were looking at a 25 basis point hike last month or this month, or 50 basis points. They decided to go with 50 because of the inflation story as being where it's at the moment. For next month, he wasn't going to foreshadow too much, but essentially said they'll look at the rates at the time, but he also said next month is likely to be 25 or 50, not 75 or going the way of the US.
Yeah, look, one of the first question from the crowd was, will you raise rates by 75 basis points next month, which is only in a couple of weeks' time? And he sort of laughed a little bit and then didn't rule out the 75, but said pretty clearly, we're looking at between 25 and 50 basis points. And the way the cash rate is going, it is going to need to get higher pretty quickly to bring down that inflationary pressure in the economy. So I'd sort of expect 50 basis points is what the logical next step is for the cash rate in a couple of weeks. He did, in his speech, basically warn Australian borrowers and get them to prepare themselves mentally and financially for higher rates. Just take a listen to his opening remarks from this morning.
As we chart our way back to 2 to 3% inflation, Australians should be prepared for more interest rate increases. The level of interest rates is still very low for an economy with low unemployment and that's experiencing high inflation. I want to emphasise, though, that we're not on a preset path. How fast we increase interest rates and how far we need to go will be guided by the incoming data and by the board's assessments of the outlook for the inflation rate and for the labour market.
Eddie, he spent a lot of time talking about what's called the yield target. He's been facing a lot of scrutiny for telling borrowers that rates wouldn't rise until 2024. So there was a bit of contrition here today, wasn't there?
Well, one of the questions from the crowd was the market is actually pricing in the cash rate to be at 4% by the end of this year, so a further more than 3% higher than it is today. And he tried to sort of hose down those suggestions that the market was right. But over the last 2 years, the market pricing has actually been correct virtually every time. When the market was pricing in a 50 basis point hike last month, they were right. Now the market believes interest rates will get to 4% by the end of this year. So for that to happen, the RBA will need to lift rates very, very rapidly over the next few months. But the Governor talked about the risk with raising rates too quickly, and that goes on some borrowers in Australia that we may just be up to date with their mortgage payments. So there's a lot of people out there that are ahead on their payments, but there are also plenty of borrowers out there that are only paying month to month. So take a listen to the risks that the Governor outlined from raising rates too rapidly.
While the median borrower has built up big financial buffers, there are a group of borrowers who have very skinny buffers. People who've taken out their first housing loan in the last year or so, who've bought a bigger house in the past couple of years and borrowed as much as the bank would lend them. Those people have fairly skinny buffers. And we're very conscious of that, and we'll be watching that part of the loan distribution very carefully as we raise interest rates.
So I think we're going to start hearing quite a lot more from the Reserve Bank Governor, Philip Lowe, Laura, over the next few months. He's actually got another public appearance later this week. He's travelling to Switzerland, to Zurich, for a bank conference, and that should be broadcast as well. So I think the RBA is going to really step up its communication with the Australian people as interest rates continue to rise, because it affects everybody in the economy.
Certainly does. Ed, thanks so much for that. We'll see you soon.